What's up, everybody? This is Chef again, and I am going to attempt to give and provide a good watch list here. The only reason I say that is because it's been a minute and been sick the past few weeks actually, and it's kind of been rough. But we're here now. We're going to be looking at this market. Let's see what it has to offer in the coming weeks. And I know there's a lot of stuff going on, and the Fed spoke and something about interest rates and and so much stuff has been going on ever since. The good thing is that I want to point out this weekly chart. No matter what's going on in the world, no matter what people are saying, no matter what kind of bias you may have, it's all about creating a setup that just makes sense versus something that doesn't make sense, and you're just trying to play something because you want to play it. Because if something is at resistance, doesn't mean it has to reject. Because something is at demand, doesn't mean it has to bounce. So we always have to remember that as traders. We enter our trades the minute that we break above, the minute that we break below, the minute that something changes or occurs intraday in order for us to actually take and execute a trade, right? A trade that is filled with proper judgment and something that can stop us out if it doesn't go our way. So today, I want to show you guys this weekly time frame. Okay, I want to point out the /ES, like where we're at. The bigger time frame and the length of the time of this weekly time frame, it's literally everything is still bullish, right? We're still up, like no matter how you see it. Every year changes, every candle changes. Every 10 minutes something changes. Over the weekend news, things change, things move markets. So Monday comes around or Sunday comes around when market opens in the futures, they're either going to gap up or gap down. Something wild is about to happen, and it's our job to understand where we are going to enter our trades based on what kind of setup we have. So this whole year, we've been trending down. Okay, so from that 4808.25 all-time high, we dropped all the way down here to this 35. And then from there, we are now currently back around this 4100 level, which is really good. So technically, if you look at it from the beginning of the year, this whole year, we literally went from 4808 down to 41, which is good. We still have 30 more days into this year, or to be more specific, a little more like 27 days or 28 days. And we're still not done. We can literally be at 44 by the end of the month. We can come back down to 35 by the end of the month. We can stay right here where we're at to end off the year. We can legit stay within this specific level right here, and this market does not have to do anything. No matter what, again, it's all about finding that specific level and that specific trend as to what we're going to look for, right? So what is the number one thing here right now? We are following a trend line. That's what we are doing here. We've dropped down, we've touched it, we've dropped down, we've touched it, we've dropped down, and then now we're at it again right here. So what I want to look for, guys, is the strength behind this specific move, right? All markets have been a little bit different, and every trend has been different. Every run, every pullback has been a little more different. As you can see here, we had an aggressive run. Okay, it was super fast, short-lived, and then it got shorted right away. Here, we actually had a decent breakout. So we had a nice run-up, okay? And then we got smacked down. The difference here with this one is the trend on the 4-hour time frame. It looks a little more clear, right? So I want to point out this 4-hour time frame. Here, nice little consolidation area down here. Once we touched that 35, nice bullish engulfing candle, came back for the retracement of 50%. And then from there, we've been staircasing on up, and all the buyers have been showing up ever since. The buyers have not stopped showing up. That's the difference between this trend and all the other ones. So now that we're at this 41 on the weekly time frame, okay, we only have one specific level here to look out for, which is the 41 and the touch of that trend line again. In order for us to go bullish any way, shape, or form, we need a good candle to do something like this, okay? A candle to close above 41, a candle to stay above 41, and actually show a bullish sign. The next candle after that would need a retest. So this is when you're going to have the retest, or we're going to continue to free fall into the end of the year, okay? Something like this. So I did 4 candles just because that's how it's going to be the next 4 weeks. Either way, we're going to look for something. Like I said, it doesn't have to go either way. It doesn't have to go up. It doesn't have to go down. It can literally stay sideways back inside. But either way, the candle that we are looking for into this week is either going to be a strong green one or a strong red one, like this. That's what we're going to be looking for this specific week. All right. So where are those levels that we're gonna identify where the sellers are going to show up and where the buyers are going to show up. So let's drop down to this 4-hour time frame. And this is where everything is going to determine where we're going to go in the rest of the week. Okay. Keep in mind, this can change overnight. We can gap down, we can gap up. Wednesday we're rallying, and then Thursday we wake up down at the bottom. Things can change real fast. So remember that, okay? Remember that we're at a critical level based on the trend line, and that trend line is like anybody out there who has a chart, who knows how to open up a chart and who understands what a trend line is, has this specific trend line, just like everybody else. So everybody's going to be watching that specific trend line. That trend line is going to be the talk of the week, the talk of the day. Whether it happens on Monday, Tuesday, or Wednesday, somebody is going to be mentioning this specific trend line because it's a magnet and it's an attraction to everyone out there. I don't know what else is involved here, but I just know that this trend line is a magnet and it's going to catch some serious attention. The minute it breaks out, remember, be comfortable trading that breakout because it's going to be all eyes on me, and there's going to be a lot of orders coming in. Okay, whether it's going to be up or down, whether people are getting stopped out, whether people are entering short position or people entering call positions, whatever it may be, there's going to be an intense amount of volume at that specific level, and be comfortable trading that breakout or that rejection. That's all I got to tell you. Okay, you do the rest. Now, where I decide where I am going to be looking to go long or buy the dip is going to be down here if we ever come down here. Okay, this is like the 39.40 and 39.50. 39.50 is going to be my entry. 39.40 is going to be my stop loss. If we end up going below that, then I'm going to be short all the way down. Until then, I am not looking for any bearish position at this top, nor am I looking for a bullish position at that top either. The one thing that I am going to try to look for is for the buyers to hold it here. Therefore, if we do hold, let's just say we do this on Sunday, right? We drop down and then Monday opens and then we rally, and then Tuesday and then Wednesday, and then Thursday we decide to break out. So if we never drop below here, Monday, Tuesday, Wednesday, Thursday, or Friday, or whatever day it may be, and then we break 41, that's when I'll go long. If we initially just run up on Monday, I am not going to take that breakout. Okay. On Monday, if we drop down and we kind of just linger in this area, I'm going to look for dip buy opportunities until, like I said, until proven wrong. This is my level of my bearish level for me to go bearish for any reason whatsoever. Till then, I am leaning bullish because of the strength that's behind us. Here's your rally. Here's your base. Here's your demand. Here's your demand confirmed again. And then there's your rally. And then this is your cool off into the next rally over 41. Remember, it's gonna take a lot in order for us to break over 41. But just remember that once that trend line breaks, it's gonna be all eyes on me. But also remember, if an aggressive sell-off starts happening around 41, 40, 60, 40, 40s, even the 4K, then be aware that those puts are going to be paying off. Okay. But other than that, those are the only levels that I can provide for you. Other than that, honestly, over 41, just trail it every like 10, 20 points. 41, 41, 10, 41, 20, 41, 40. Okay. Keep it as tight as possible that you can, because at any minute the sellers can come in here right here, take over that candle, engulf it with a bearish one, and then drop it way down to the bottom again. Okay. But as you can see from this trend, I don't think that there's going to be that many sellers involved. If there is, we will break heavily over 39.50 right here, and then we'll see a nice little drop down in the market. Okay. But with that said, I also want to share with you guys a couple tickers that have some decent setups, whether upside or downside. Okay. All right. Let's look at ARC. ARC is Kathy Woods. If you guys don't know, make sure you do some due diligence. All this resistance right here around this 39 and 38.50. This one, the only reason I'm looking at it is because of Tesla. Tesla's in a great spot right now when it comes to risk to reward. So this one, just anything over 38, 39, 40 is going to be a change of trend for me, okay? So let's take a look at Tesla. All right. Here's a nice reversal right here. I was able to catch this swing trade. And unfortunately, I didn't catch it all the way into this 185, but I caught a piece of this. And I've been trading Tesla ever since because I just think the risk to reward here just makes perfect sense. I mean, we're at like 190 and the potential to go back to 300 is fairly high. Okay. But for now, it's the pattern in itself that we have. Okay. So over here, we have this huge base that we broke down from. We dropped down and then came back inside, and then we created this pennant. On that specific day, it broke out, it rallied, dropped down, cooling off, and now it's creating a little flag. So it's a staircase pattern, a nice healthy staircase pattern that's respecting its trend, it's respecting its patterns, and it's continuing its way back up. So just look for a breakout over 195. Okay, whatever the pre-market is going to be as of right now is 195. 195 into 200, and then from 200 to 204, 205, and then from 205 we're going to head into that 210. Okay, but just look for a staircase pattern, buy on red candles, though, so you're able to capture most of that big move. Okay, the next one is going to be jets. Keep in mind that airlines may potentially start reversing sometime soon. Here's a little squeeze play. It might just stay inside here until the market can rally over 41. If the market decides to rally over 41, then I'll be looking for jets to change trend. So this is like all airline sector. So make sure you check out some of those names: DAL, AAL, SAVE, and UAL. Okay. All right, the next one is going to be Amazon. Amazon showed a lot of weakness the past 2 days of the market, which is okay. But right here, we can just see that it's slowing down in these levels. So anything over 95, I am leaning bullish. Anything below this 91, I'm going to lean bearish. So my dip buy, like I said, if we dip down in the market down to like that 39.50 level, and Amazon's right here at this 91, I am definitely going to look to buy some calls. The market decides to rally over 41 and we're over 95, I'm going to grab some calls on Amazon. That's how simple it's going to be for this specific trade. I wanted to keep on trading sideways. I wish it would Monday, Tuesday, Wednesday, and then Thursday end up like down here or something so I can ride it back up. But either way, I'm going to be looking for buy opportunities down at this level. I don't think it's going to drop anything below 90 anymore. I think it's found its bottom, its value points. And again, it's just an opinion, but definitely I'm going to be looking to grab calls down here or over 95. Okay, so that's Amazon. The next one is going to be PayPal. PayPal is a weak name actually, and I am in a call. I don't know how right I am. I haven't looked at it. But I did, I will tell you that I bought it around like 78, 79. Okay, we're currently down at 74.69. So we're gonna have to see. what this is all about. All right, so let me see if I can. All right, so that was weird. Sorry about that. My headphones just like muted on me, so I had to get these new ones real quick. Oh my goodness. All right, hopefully everything works out fine. All right, anyways, sorry about that. So here's PayPal. Like I said, I am in this position and I am kind of down on it, but I'm not sure how much. So we're gonna have to wait and see. Anyways, I needed over 75 in order for this to go bullish. I think it's at a great price point, but we're just gonna have to wait and see on Monday. Now this has potential to drop back down to 70. Okay. So I'm not taking anything away from the bearish side. I just think that the risk to reward makes sense more to the call side than it does for the downside. But we'll see. All right, the next one is going to be Disney. Let's see. Here's a setup on Disney. Nice trend right here. Nice squeeze right here. We closed pretty strong on Friday. So anything over 99.50 or even psychologically 100, it's going to be a long into 102, 104, 106. Okay. And then the next one, the last one, is going to be AMD. AMD is in a good spot as well. All right, so I want to show you the weekly time frame because everybody's going to have this trend line as well. Here's the reaction of the trend line. Here we try to go. So this past 3 weeks, we haven't broken above. We've tried, but then we came back down. So because of that reason, take that off. I don't need it. We do have this nice little trend line here and a potential channel. So if this holds on Monday here over 74 and 75, I am going to treat this as a bullish setup, and my stop loss is going to be right below 74. Very simple trade, right? Other than that, guys, have a good week. I know it's been a while since I've seen you guys, but hopefully these tickers, these setups can give you guys a good watch list and provide some good plays for you guys. All right. Last one for NQ. Just so you know, this has the best risk to reward based on the futures. If you look at the weekly time frame, it looks like, again, it's almost like ES. It's either we're going to break above or we're going to just kind of chill inside here for the rest of the month, or just next week. It's going to be a very, very important week this coming week, Monday through Friday. So just be aware. It's either we're going to go bullish over this 12, and then go for the 125 or even the 13, and ES over that 41, or we're going to come back down to that 39.50. So just remember, it's a very important level to see and to keep eyes on. It's either we're going to try to break above or the sellers are going to come in hot and then we're just going to drop it right back down. Okay, so be ready for both positions. Be ready for puts. Be ready for calls. And whatever you do not get biased once levels start to break. Okay, don't go against the trend. Let the trend go. If it's breaking above and you're in puts, stop out right above 41, like 05. Okay. If you're in calls over 41, make sure you stop out below like 40.90, 40.95. Okay, keep it real tight. Don't let the trade go against you, and don't sit there back holding and think that it has to drop down or think that it has to break out. Just be aware, be mindful. Okay. All right, guys. You guys have a good one. Do apologize for the inconvenience earlier with my headphones. But hopefully you guys caught some uh good tickers, good names, and good levels. All right, see you guys on the next one.